office at the New Delhi. So Salt Lake Corporation presented the following trial balance to the head office. That means Salt Lake Corporation is a branch and the head office is located at the New Delhi. So basically by looking at the problem, it's simply I can say it's as an independent branch. Why? Because in the dependent branch, the branch office will not maintain the records. So in this case, Salt Lake Corporation being a branch prepared its trial balance and the trial balance is forwarded to the head office, so that head office will incorporate this trial balance and prepare the consolidated financial statements. Now let us see what is given. Particulars debit amount, particulars credit amount. Delhi head office is given as 6,480. Stock on 1st April 2012 12,000. Purchases 35,600. Goods returned from head office, 18,000. Salaries 3,000. Data 7,400. Rent is 1,920. Miscellaneous expenses 940. Furniture fixed asset which is nothing but 2,800. Cash at bank 3,560. Sales is given, goods supplied to head office is given, creditors is given. That's what is the trial balance. So now let us see what is asking. So based upon this we'll try to discuss. Now additional information. The branch account on head office books on 31st March 2013 stood 920 debit. Branch account on head office books. Branch account in head office. Then what is this? Delhi head office. Branch has prepared the accounts. When the branch has prepared the account, head office balance will be there. Whatever amount of balance which is there, that's something called as what Delhi head office account. And at the same time, even the Delhi head office will also maintain the account. So what it says? It says branch account is having on head office books on so and so date is 920 rupees debit. On. We'll come to that. We'll come to that later stage. On 31st March 2013, head office forwarded goods to value of rupees 5,000 to the branch, which was received on 3rd July. That means what is the date of the trial balance? 31st March 2013. On this date, what happened? Head office forwarded the goods value 5,000 to the branch, which are received by the branch on 3rd July. 31st March, the goods were in transit. Goods were finally reached by the branch office on 3rd July. Till that point of time, I should consider this as something goods in transit. We need to record this as what? Goods in transit we need to record. Then, let us see the other aspects. Cash remittance of 2,400. Cash remittance of 2,400 by branch on 29th March 2013 was received by the head office on 2nd April 2013. Cash remittance by the branch. Branch has made a payment of 2,400. So ultimately what the branch will do? Branch will reduce the liability to the extent of 2,400. When the branch has made a payment? 29th. But when the payment reached the head office? 2nd. Till that point of time, this has to be considered as something called as our cash in transit. There is something called as goods in transit. There is something called as cash in transit. In this problem, I will be explaining also the other concept which I have specified. The need to do something called as the reconciliation between the head office balance and the branch office balance. I will come to that later. Let us first finish off the question, then I will come to that point. Now, closing stock was valued at 5,400. Show incorporation entries in the books of head office. Show separate branch trading and profit and loss account, and prepare branch account and branch balance sheet also in the head office books. So everything you are doing in the head office books, not in the branch books. We have not yet discussed the branch. We'll discuss that. Now here, let me try to explain the concept. There may be a cases where you are closing your balance sheet. At the time of closure, see, let me put it differently. Two different set of books are there. Head office is maintaining the branch account. Branch office is maintaining the head office accounts. At the end of the day, both should tally. Generally, that will tally. But there may be a cases where that won't tally. The reasons are only two. Goods in transit, cash in transit. Branch has sent some goods to sorry, head office has sent some sort of goods to branch. Branch not received. So immediately what the head office will do? Head office will debit the branch. Head office is not concerned whether the goods are received by the branch. So head office will record the transaction in the books of head office. Thereby what happens? Debtor balance increases, branch balance increases. So immediately on the day what the head office is doing? Branch account debit to goods and to branch. Done. Increased. But the goods are not yet received by the branch. So ultimately on the date if I close the books, definitely there will be a gap. The branch account balance is different, the head office account balance is different. I mean to say, head office books branch account balance is different. In branch office books, head office account is different. So if you look into this case, generally, ideally, in the books of branch, head office will be always acting as a creditor. Creditor being a liability will be always on the credit side of my trial balance. But in this case, if you observe, Delhi head office account is on the debit side of the trial balance. That's what is something we need to understand. Now, let us come back to this. Branch account on head office books on 31st March 2013 stood at 920 rupees debit. So ultimately, in the books of head office, always the branch is a debtor. So I'll be always having some sort of debit balance. Now, there is a difference. 6,480 and what is the other one? 920. That's what is the difference you are having. Now let us see what is the difference for that. Okay, so let us see here. 6,480. Okay, 6,480 and what is the other one? The other one is nothing but 920. Let us see. 920. Now what is the difference? The difference is nothing but this. Now what we are trying to do? We are trying to bring the balances of the branch in the books of the head office. When I am trying to incorporate the balance of the branch into head office, in branch books there is something called as head office. In head office books there is something called as branch. So I need to adjust, I need to offset. Both should be equal. So first of all, the both things should be equal. But here in the present case, there is a difference. The difference is what? 6,480 and 920, there is a lot of differences there. And that too, 6,480 should be a credit balance, but you are showing that as a debit balance. And in the books of the other one, the head office, it's a 920. So there is a lot of differences there. We need to do the reconciliation. If we try to do the reconciliation, then both the balances will be equal. Then I can offset the balance in the branch, I mean the head office account in the branch with the branch account in the head office, I can offset. Thereby that will become zero. I can eliminate the entire amount of transaction. That is the only one extra activity which you are supposed to carry on in the case of independent branch. That's it. If you are able to do it properly, the independent branch becomes very simple. Now, let me tell you those cases where the balance between the branch, the balance between the head office will arise. Head office sending the goods to the branch. Branch has not yet received goods in transit. So here let me write the reasons. Reasons for difference in head office account in branch books, branch account in head office books. What could be the reason? Primarily, let us see, the first reason could be what? Goods sent by head office to branch, not at received, but not at received by whom? Not at received by the branch. Head office is, say suppose head office is in Delhi, branch office is in Vizag. Head office sends the goods on 30th March. Immediately on the date of sending, head office will record the entry as what? Branch account debit, goods sent to branch account. Done. The balance has been increased. But when the branch will record as soon as the goods are received. As the branch receives the goods, then ultimately the branch will record the entry. So Delhi, Vizag, there is a lot of distance. So ultimately, the books will be closed on 31st March. On the date, branch office does not receive the goods. So ultimately, the balance in the head office books is different. The balance in the branch books is different. So that is the reason I need to do some sort of reconciliation. So who need to pass the entry? Already the entry is passed in the books of the head office. Now the branch should pass an entry. So already we have discussed what entry the branch should pass. In this case, we have discussed what entry. See, in this case, entry is to be recorded by branch. Entry is to be recorded by branch. What entry you have to record? See, whatever in transit, whoever books is, whether you are passing the entry in the head office or you are passing the entry in the books office, always transit will be always debited. Goods in transit account, debit. What you are doing? Goods in transit account you are debiting. To what? Head office. Liability should increase. So ultimately, goods in transit account debit to head office account. This is one entry which the branch need to pass. This is one of the reason for which you may be having a difference between the balance in the head office account in the branch books, the balance in the branch account in the head office books. That's what is one reason. Okay. So let me change it here. Goods sent by head office to branch. That's one reason. Then what is the next one? Goods returned by branch to head office. Branch has returned the goods to head office on 30th March. So ultimately, in branch books, the transaction is recorded. In the head office books, the transaction is not recorded. So ultimately, in whose books now the entry is to be recorded? So this entry is to be recorded in head office books. Is it clear? See, first case, head office sending the goods to branch, immediately head office records the entry. Branch office will record the entry only on receipt of the goods. Now, branch is returning the goods to head office. Immediately the branch is passing an entry. What entry the branch passes? The branch is reducing the liability, head office account will be debited to goods received from head office account will be credited. Thereby that entry is considered. Now, the goods are in transit for whom? Head office. So ultimately this entry has to be recorded in the head office. So as I said earlier, whoever books you are passing, always transit should be debited, whether it is cash in transit, whether it is a goods in transit, transit account should be compulsory debited. Earlier, for these goods, you had created a debit balance in your branch account. Branch account debited to goods and to branch. Now the same goods you are getting it back, sales return. So ultimately debtor balance should reduce. So ultimately what I will do? To branch. That's it. This is the entry which I am supposed to pass whenever the goods are returned. So in this case, in one book the entries has been recorded, other book the entry is not recorded. So I need to pass this. We need to identify in whose books the entry has to be recorded. So based upon this, what we can do? We can do the reconciliation. Now, next case, cash sent to branch not yet received. Head office has remitted some sort of cash to branch, but branch has not yet received. Head office, as soon as it sends the money, will record in its books. What entry it will pass? As it is giving the cash, giving some sort of advance to branch, the debit balance increases. Branch account will be debited to bank account or to cash account will be credited. Now, that money or that cash is in transit, is not yet received by the branch. Then ultimately in branch books the entry has to be passed. So in this case, where you are passing the entry is to be recorded in the books of the branch. What entry you have to record? Whether it's a goods or cash in transit, anything which is a transit is supposed to be debited. So here cash cash in transit account should be debited. As my liability is increasing, I need to credit my head office account. This is the entry which I need to pass. Now, cash remitted by branch to head office, not at received by whom? Not at received by head office. So this cash is not at received by the head office. Then ultimately, as soon as the payment is made by the branch will pass an entry. Cash is not received by the head office, so head office does not have any entry. There is a balance which is difference in the head office books, so I need to record this entry where? In the head office books. So entry is to be recorded in head office books. Always, whether it is a cash or goods in transit account should be always debited. So ultimately, as the cash is to be received, the debtor balance is going to reduce. So ultimately, I will credit the branch account. So these are the 4 entries and 4 purpose which causes some sort of differences, for which we are supposed to do some sort of reconciliation. Just take this. So we'll start working with the first problem. Clear? This has been taken down. Now let us continue with our problem. See, in this problem, let us do the reconciliation. Of course, that reconciliation is not important here, but for your understanding, with the help of this 4 entries, let us try to do the reconciliation. Okay. For doing a reconciliation, I need to open 2 different accounts. One, let us open in HO books, head office books, and another in the branch books, head office books as well as branch books. In this, head office will prepare the branch account, branch will prepare head office account. Clear? Now let us see particulars amount, particulars amount. So these are the things which I need to have here. At the same time, I need to have here as well. Clear? Now let us go to the problem there. So what the problem says? The problem is telling, whose balance is this? Salt Lake Corporation presented the following trial balance to the head office. So ultimately, this is nothing but the balance in the books of the branch. So ultimately, in branch account, the head office balance is what? To balance brought down, it is mentioned as 6,480. That's what is the balance which is shown. Now, if we come down, branch account on head office books stood at 920 rupees debit. So ultimately, here balance you are having 920. So ultimately, balance brought down you are having 920. There is a difference. There could be 4 reasons for having a difference. Now for each and every reason, the entry going to be passed is different. Now let us see what are the reasons for this in the problem, so that I need to do the reconciliation. Let us go back to the problem there. So what the problem says? On 31st March, head office forward the goods value 5,000 to branch, which were received by the branch on 3rd July. Head office goods sent by head office to branch, not received by the branch. So already entry is passed in head office books. Now where I should pass? I should pass the entry in the branch account, branch books. I need to pass the entry in the head office. So what entry I need to pass? The entry is to be passed is this: goods in transit account to head office. So ultimately in the head office account, I have to consider that as what? Goods in transit, amounting to, what is the amount there? The amount is nothing but 5,000. So amounting to 5,000. That's what is the transaction. Now what is the next? Cash remittance of 2,400 by branch on 29th March was received by the head office on 2nd April. The branch has done a cash remittance, but the cash remittance was not received by the head office on 31st March. So ultimately, branch books, the entry is passed. Entry should be passed in whose books? Head office books. Now let us go back. Cash remitted by branch, not received by head office. So entry has to be passed in the books of the head office. What entry I have to pass? Simply I will consider what? Cash in transit to branch. So ultimately branch account I have to consider it as by cash in transit. By cash in transit amounting to 2,400. I guess 2,400 is the amount. Amounting to 2,400. Let us see. Yeah, amounting to 2,400. Now, that's it. There are only two reasons. So ultimately now if I close the balances here, 2,400 minus 920. The balance is what? 1,480. Same balance I should have here as well. 6,480 minus 5,000, 1,480. Here you will be having a credit balance, some other place you will be having a debit balance, thereby the total account will be offset. One place you will be having a liability, other place you will be having an asset. I can easily offset. So that is the reason for which we do the reconciliation. Now I hope that the reasons for reconciliation is understood, and how do you do the reconciliation also is clearly understood for you. Okay, so just take the head office, in the head office books the branch account, in the branch office books the head office account, then we'll proceed further and solve the problem. Okay, so now let us start with the problem. See exactly what is asking. He is asking you to prepare something called as branch trading account, branch profit and loss account, and also prepare branch account and branch balance sheet in the head office books. Incorporation entry. So incorporation entry, I guess maximum 9 to 12 entries will be there, that will do. So entries we are supposed to pass. Just simply prepare the trading account and profit and loss account. Prepare branch account. Obviously your branch account will tally. Now if you remember, when we have discussed the introduction of independent branch, there we have discussed two methods. First method, I will bring the assets and liabilities also into the books of the head office. Second method, I won't bring the assets and liabilities, I will bring only the net profit or net loss will be bought. So what we will do, this problem let us do in both the methods, method number 1 as well as method number 2. Method number 1, your branch account will get tallied. Method number 2, your branch account will not be tallied. Clear? So now let us see what is given. He is asking you to pass the journal entries. He is also asking you to pass the prepare your trading account and profit and loss account, and also prepare a branch account and branch balance sheet, in everything in the head office books. Now it's a quite simple problem. See, generally the complicated situation is what? I need to bring these balances, then I need to prepare the consolidated head office plus branch. That could be something challenging. So in this case we are just bringing the balances of the branch into head office. That's it. We are not consolidating. Clear? So let us start with this. First, journal entries in books of head office. Is the head office name given? No. Salt Lake is the branch name, head office is not given. So ultimately journal entries in the books of head office. So let us take like this: date, particulars, debit, credit. So these are the columns which I need to have as a part of my journal entries. Now, okay, we'll come to that later. He is also asking you to prepare branch trading and profit and loss account. Okay, branch trading account you are supposed to prepare, branch profit and loss account also you are supposed to prepare. So for this I need to take particulars, amount in rupees, particulars, amount in rupees. This we need to prepare the trading account as well as the profit and loss account. Then he is also telling you to prepare something called as the branch account. Branch account. So if I do based upon first method, my branch account should get tallied. So how do I prepare branch account? Same columns again: particulars, amount, particulars, amount, amount in rupees. Now finally, once we are done with the branch account, we need to prepare something called as the balance sheet. All these transactions are happening in the head office books but not in the books of the branch. Now let us get into the problem here. Delhi head office, what is this? Opening stock. So as it is an opening stock, here what I have to do, I have to, no, see, here, yeah, opening stock is what, 12,000 is nothing but your opening stock. So to opening stock, if I consider how much, the amount is nothing but 12,000 is going to be called as the opening stock. Then purchases, to purchases, what is the amount there? 35,600. So just simply you are preparing the trading account, you are finding out the profit and loss account, then we'll be passing the entries. So purchases is this, goods returned from head office. Say goods supplied to head office 12,000 is there, goods returned from head office 18,000 is there. So ultimately you are getting the goods from head office 18, you are returning the goods. See, the word framing is not proper here. So goods supplied to head office, that means goods returned to head office is 12,000. You are returning the goods 12,000 to the head office, you are receiving the goods 18,000 from the head office. That's the reason you are getting this as a debit balance, this you are getting as a credit balance. So ultimately what I am supposed to do, goods received from head office I need to consider. To goods received from HO amounting to what? Goods received from HO amounting to 18,000. So 18,000 I need to debit in my trading account. Then salaries. Salaries is something related to my profit and loss account, so I will consider here somewhere as to salaries amounting to what? Salaries amounting to 3,000. Debtors balance will be taken to the balance sheet, that will say at later stage. Rent is given, so to rent. Let us see whether any outstanding rent is also there. So in this problem there is no outstanding, we have to consider it directly. So rent is how much? 1,920 is the amount of rent. So let us consider here as 1,920. That's what is something called as to rent. Okay, to rent 1,920. Then to miscellaneous expenses amounting to 940 is the miscellaneous expenses value. Then furniture, it's a asset that will show when we prepare the balance sheet and will pass an incorporating entries for that. Cash and bank balance also will be taking as a part of your asset. So apart from 3, Delhi head office balance, then furniture, debtors, cash at bank. 1, 2, 3, 4. We have considered everything on the debit side of the trial balance. Then let us come to the credit side. What is this? Sales. So by sales amounting to what? 76,000. By goods received from HO. You received some sort of goods from HO and you are returning it back, so ultimately amounting to 12,000. So ultimately creditors will be considered in the balance sheet and the same thing will be bought into the head office books, that will pass the entry later. So apart from 5 transactions, all the transactions are said to be incorporated. So branch account on head office books stood at 920 that we have seen. These entries we need to pass. Of course, we already prepared the reconciliation statement also. We need to incorporate the entries here. Then closing stock was valued at 5,400 by closing stock 5,400. Is it right? Yeah. Now if I close my trading account, the total in my trading account is going to be this. What is the balancing figure? The balancing figure is something called as my net profit. The balance is something called as my net profit. Sorry, gross profit. To gross profit. I will call this as gross profit. Now what will happen? So let me put this as your balancing figure. Balancing figure. I will call this as your balancing figure. Now by gross profit brought down. By gross profit brought down is something 27,800. Okay, gross profit brought down is something going to be 27,800 that we have taken there. Now let us see whether you are having any sort of depreciation adjustments. Nothing, it's very simple. So ultimately directly I can do the balance here, something called as what, to net profit. I will call this as my net profit. So Let us do the totals here. My total of my profit and loss account is going to be 27,800. So what is my balancing figure? 27,800 minus my expenses is going to be called as my net profit. So my net profit is what? 21,940 is going to be my net profit. So one thing we have done. Now what is asking? Branch account in books of head office. Branch account in the books of head office, you are having a debit balance to balance brought down amounting to, okay, we'll come to this. Okay, we'll come to this at a later stage. Now let us try to incorporate the entries in the books of the head office. Okay, let us try to pass the entries here. Now, what is first method? I need to incorporate all my expenses into my head office book. So what I have to do? Branch trading account. Branch trading account should be debited. Branch trading account with what? Whatever expenses you have. Opening stock plus purchases plus goods received from head office. What I have to credit? Credit something called as your branch account. So what we are crediting here? Branch account is being credited. Being expenses of branch recorded. So ultimately whatever trading account you are having, that entire thing has been brought to the books of the head office. Then what I need to do? Whatever incomes you have, whatever credit side you have, all the credit sides of your trading account should be bought into the branch account. So I need to bring this. So to bring this, what I will do? I will debit my branch account. I will debit my branch account and I had to credit something called as to branch trading account. I will do this. So ultimately branch account, what is the total? Sales, goods, closing. So total put together 93,400 and 93,400. Now I got a gross profit of 27,800. So what I should do? This gross profit I had to take down. This gross profit I had to bring down to something called as my profit and loss account. So what I am going to do there? We are going to take the gross profit to your profit and loss account. So gross profit account debit to something called as our branch profit and loss account, amounting to what? The difference between 93,400 and difference between 65,600. So ultimately that is coming to 27,800. So now the gross profit is transferred to your profit and loss account. Now what I have to do? I had to consider my revenue expenses. I had to consider my revenue income here. Now what I am going to do? We are going to debit your branch profit and loss account. Whatever expenses I should debit: rent, salaries, miscellaneous. So branch profit and loss account will be debited with this to branch account. I need to credit with what? 5,860. So with this, what we have done? Bought the profit into the branch PL. Now from this branch PL, I have to ultimately transfer that to something called as your what? I need to transfer this to something called as my branch general profit and loss account. So now what we have done? We have not arrived at the profit. We have calculated something called as the expenses part. Now gross profit minus your expenses gives you your net profit. This net profit I need to transfer to where? To the general profit and loss account. So now ultimately branch PL is having a balance of what? 27,800 minus 5,860. The balance is going to be my net profit 21,940. So let me put it here. 21,940 is the debit balance. 21,940 is the debit balance. This I have to debit. To what? To general profit and loss account. So ultimately this has been transferred to the profit and loss account of the head office. Done. So the ultimate purpose is done. Now the profit of branch has been brought into the books of the head office. Now I need to bring assets of the branch, I need to bring the liabilities of the branch, then finally we can go and close the branch account as well as the balance sheet. We'll come to the branch account at the later stage once the entries part is done. Now let us go back to the trial balance given there. What assets you have? Okay, the following assets has to be brought down. Debtors, you are having a debtors. Now rent, sorry, debtors is something, furniture is the other thing. Okay, debtors you are having, furniture you are having, cash and bank you are having. What is the amount of all this? 7,400, furniture amounting to 2,800, cash and bank amounting to 3,560. Two, what I need to do? This everything should be transferred to my branch account. So what is the total for this? 7,400, 2,800, 3,560. This entire amount will be transferred to the branch account. Okay. Then the liabilities part. There is a liability of the creditor. The liability balance is also supposed to be transferred. So what I will do? Branch account will be debited. Creditors, which is nothing but the liabilities account, is to be credited. Creditors account to creditors account. Right now, let us see what is the amount. 3,700, 3,700. Okay, what you do, quickly take up the entry part and prepare the profit and loss account and balance sheet. Then we'll go and close the branch account as well as the balance sheet. With that, first problem is set to be completed. So just quickly take a note. So right guys, so let us move on to the other part. Two more things are pending. See, we had done the reconciliation of the balance between the head office books and as well as the branch office books. I mean, in the head office books, the branch account balance is what? 920. In the branch office books, the head office account is something 6,480. We have prepared an account and we have done some sort of reconciliation. But those entries are also to be incorporated. Now, in whose books you are passing the entries? You are passing the entries in the books of the head office. So first, what I have to do? I have to first of all make the balances equal. I need to make the balances equal. Then only I have to proceed for consolidation. Without doing the balance equal, I should not proceed for consolidation. Why? Because head office books, I mean branch office books, the head office account is showing a balance of 6,480 and head office balance is showing a branch account balance of 920. How I can adjust? I can't adjust. If both the things are equal, the debit can be offset by the credit. So I need to make that equal. To make that equal, I need to record the entry. Few entries are supposed to be recorded to make the branch stock equal, branch equal. Few entries are supposed to be passed only in the head office side to make that equal. So now what we are doing, we are doing the reconciliation. When I do the reconciliation, I need to consider all the entries so that my balance of stock will be equal. So in this, two entries are supposed to be done. Okay, one entry is nothing but your goods sent to branch. Second entry is something called as cash in transit. So these two entries are supposed to be recorded. Again, let us read that. 31st March 2013, head office forward the goods to value 5,000 to branch which were received. Head office books, the recording is done, but branch office has not received the goods. I need to pass this entry in the books of branch. But already we are now prepared the trading account and we had prepared the profit and loss account and we are bringing the assets and liabilities of the branch into the books. So I need to record this in my branch. So where I will do this recording? Now I need to do the recording especially in the head office books to make that equal. Now let us pass the reconciliation entries here. Goods in transit, debit to what? Branch. To branch. That's what is the thing. Now why we are calling this as a branch? Because this entry the head office is recording on behalf of the branch. To make the branch account equal, this entry is supposed to be passed. That's the reason you are calling it as goods in transit account debit to branch. Now okay, Or to put it differently, if the branch account has passed an entry goods in transit to head office, goods in transit is an asset. Okay, let me put this in a different way. So branch office has passed an entry as goods in transit to head office, that will be reflected in the trial balance. So if I consider that, then ultimately goods in transit is showing some sort of debit balance that the head office should bring into the books of the head office as an asset. That's what is the thing which you are trying to do. So what is the goods in transit here? The goods in transit amounting to 5,000, the goods in transit amounting to 5,000. Then branch office has made a repayment to the head office amounting to 2,400, but which has not been received. Cash in transit. Branch account has passed this entry. Head office has not passed this entry. Now I need to record this. Whatever it is, your objective is simply to do the reconciliation. Make the balance of the debtor, branch equal, make the balance of the head office account equal, then you have to set off, then only you are supposed to go for consolidation. So our objective is to make both the balances equal, trying to find out the differences. Now, 2 branch amounting to 2,400, amounting to 2,400. So with this, the entries part is closed. Now let us come to the branch account. Balance brought down. How much? 920. So he's telling you, you are having a balance of 920, and all these entries, whatever he had passed, I need to reflect that in my branch account. So what is our first entry? Branch trading account debit to branch account. Branch trading account debit to branch account amounting to 65,600. So you are having a balance of 65,600. This balance, what I need to do, I need to reflect in my branch account. So by branch trading account amounting to what? 65,600. Then what? Branch account debit to branch trading account credit. So ultimately in my branch account I have to consider it as branch trading account amounting to 93,400. Now gross profit has been transferred to branch profit and loss account. Branch profit and loss account, whatever expenses you have that you are debiting to branch profit and loss account to branch account. So ultimately let us come to the branch account here by branch profit and loss account amounting to the total expenses 5,860. Now indirectly what I had considered, I had considered the income, I had considered my direct income, I had considered my direct expenses, I had considered my indirect expense. So ultimately the difference in this account is something called as our net profit. Now ultimately what? I need not transfer the net profit because already the difference is there in the branch account. Then what I'm supposed to do? Debtors, all the assets. Now what you are doing? By assets. What is the total of the assets? 7,400, 2,800, and cash at bank is going to be this. And I need to debit here as what? Liabilities. So branch creditors, you are having something. So ultimately let us come here, take that as 2 creditors amounting to 3,700 is the value. Now goods in transit is there. By goods in transit jet, which is amounting to 5,000. This I need to record. Cash in transit to branch. So ultimately by cash in transit to 1,400. So now that's what is something called as your totals there. One more thing, one change I need to do it here, because we are also having the closing stock. That amount we have not entered here. Stock, because if you go to the trading account here, we are having a closing stock amounting to what? Closing stock amounting to 5,400. So even I have to consider the 5,400. So ultimately the total assets which I am transferring to my branch account is what? 9,160. So let us change this to 9,160. Now ultimately fundamentally my branch account should be tallied. So my branch account should be automatically tallied. That's what is nothing but your first method. Now balance sheet, it's quite simple. You try to prepare the balance sheet. So what we'll be considering here in the balance sheet, I'll be considering this. Okay, see balance sheet, what I'll be considering, I'll be considering the all the assets, you'll be considering all the liabilities, you'll be considering the balance of your what profit balance, whatever you are getting, that would be considered as a part of your balance sheet. We'll do that. First let us do this in the other method also, then we'll go and see the balance sheet. So branch account, the same branch account what we had prepared, now we'll do the branch account in the second method as well. This is nothing but your second method. So till now we have done the problem based on first method, now we are trying to do the same thing based upon your second method. Now let us see what is my second method and how do I the problem here. So this remains the same. Okay, one second, let me delete all these things so that we can start afresh. Yeah, now balance brought down will be the same. What we are doing, all these entries, trading account, profit and loss account, all these assets we are not bringing. Simply what I will do, whatever profit you are having, that profit only we are trying to incorporate. That's it. Apart from that, we are not trying to bring any other things into consideration. Only that element we are supposed to consider. Okay, so what you do, okay, better you finish off the problem till here, so we can proceed further and see the second method branch account and we'll close the balance sheet. So with that I can say the first problem is done. So just quickly copy down till that extent what we have finished so far. Okay, hope you have done with this. So now what we'll do the branch account as per second method, then we'll prepare the balance sheet. With that I can say first problem is done. Now balance brought down remain the same, this will remain the same by goods in transit as well as by cash in transit, that remains the same. What we'll do here, assets and liabilities will not be transferred, only the element of your net profit will be transferred. So what is my net profit here? My net profit is nothing but 21,940. So I will be considering only the element of net profit here to net profit. That's it. Now if I close it here, I will be getting a balancing figure. What, let us do the total and see what is the balancing figure you will be getting. 2860, 2860. Okay, let me delete this. Now what is the balancing figure here? 22,860 minus 5,000 minus 2,400 gives you 15,460. Let us see, let us check what is my total assets. Total assets is 19,160 minus what is my creditors, 3,700. So ultimately the difference is nothing but your net assets. That's what we have discussed. So ultimately the balancing figure in the branch account is going to be simply called as the net assets balance you will be having. So what is the meaning of this? In this second method, you are not closing your books every year. That means in the first method, what you are doing, all the assets, all the liabilities are being transferred. So whenever you are not transferring all the assets and liabilities, ultimately impact is what? There will be some sort of balance carried down, which is nothing but something called as our net assets. That's what is something called as our second method. It's very simple. Now, okay. So let us try to prepare balance sheet. Let me do it here for you. Okay. Yeah, as there are few cases which is linked up, so one second before doing that. Yeah, fine. Now let me prepare the balance sheet here. Balance sheet in books of head office. Okay, liabilities, amount, asset, amount. So these are the four things which you are having as a part of your balance sheet. Now we got net profit. So generally to the capital, I need to add the net profit. As the problem, we don't have any sort of information about the capital. Directly, I'm considering something called as my net profit, 21,940. And the branch is also having some sort of creditors. Creditors amounting to what? Amounting to creditors amounting to 3,700. So let us also consider 3,700. 3,700. Now the branch is having some furniture amounting to 2,800. The branch is having some debtors amounting to 7,400. The branch is having a cash balance amounting to 3,560. The branch is also having something called as debtors balance amounting to, debtors is what, 7,400. So debtors is coming to 7,400. So all the transactions has been considered. And there is a debit balance of the head office. So generally head office should be the credit balance. So as the head office is showing a debit balance, I can consider it as an advance. So what I will do, instead of considering that on the asset side, which is wrong, I need to reduce that from my net profit. So less what? Head office balance. How much? 6,000 something, 6,480. 6,480. Again, head office account is generally a creditor. Creditor balance should be always a credit. But in the problem, the head office balance is shown as a debit balance. That means I have to consider this as an advance to supplier. So if I consider this as an advance to supplier, I have to show that as my current assets. But ideally, I should not show that as a current asset. So the reason what I will do, we are trying to reduce this from your net profit. Now, after reducing from the net profit, what is the balance you are having? 5,460. Now this 5,460 plus my creditors is going to give me a balance sheet total of we need to, okay, I need to consider even the closing stock that we have not considered there. One second. So closing stock, so you are also having something called as a closing stock. Closing stock amounting to 5,400. Now ultimately what, my balance sheet total, okay, one second, there is, oh, debtors balance we have taken it 2 times. So here I need to consider only my closing stock. So closing stock, if I consider, what is the value of my closing stock? The closing stock total is coming to 5,400. So ultimately my balance sheet total is something 19,160. That's it. Okay. So hope you understood this. So quickly take it down so that we'll move on to the second problem. Okay.